Mic check, mic check. We got just a couple of minutes to go. Welcome, welcome, welcome. Vote on the poll. I'm curious to know, what type of trader are you? And we have plenty to talk about. China. There's a lot going on in Chinese territory. We're going to go over it, make sure that you are aware of what is going on. Stick with us, guys. Just a minute left. You're going to love it. I'm going to like it. We're going to have a good time. What is going on? The squad is in the house. Dan, Bob, Dan. The greatest moderator alive. Oh yeah. Happy Thursday, Erica. Happy Thursday to you. Tomorrow's Friday, baby. All right, guys, I think it's time. We've waited long enough. Ladies and gentlemen, with your approval, we're going to start this bull bear brief. I am pumped. I am pumped for this one, guys. Take a little sip shawana. Let's do it, guys. Welcome to the Bull Bear Brief, where we go over a little bit of everything. There's lots of topics we like to talk about, but it generally leans towards the stock market, right? There's quite a bit going on out there. My main focus today is on those Chinese stocks. We got plenty of other things that we need to go over too, but do keep in mind, China, it's a big thing. Last week, we told you the stocks were in play. Just a few days ago, we were looking at BABA, we were looking at PDD. It's a crazy thing, so we got to talk about it, and we got to be about it, baby. We also have Micron. We have a little chat about healthcare, Pfizer, some deaths in Pfizer, yucky. We're going to talk about the CME Fed tool, about the overall market, trying to start pricing in now another rate cut, and we'll go over that very, very soon. But first, let's take a news from our, let's take a quick second to look into our sponsors. Monster Energy Drink today. We're going to get one of those though. We're going to get ourselves a sponsor very soon. What's going on? Beef Stewie, what's going on? It's good to see you. Jimmy Bright, good to see you. Erica says happy Thursday to you. It means tomorrow is Friday. We're going to have a good time. Predator is here and he is on time. This is going to be a good show. I tell you that right now. And Bob Dan is getting ready to batten down the hatchets and wait for another hurricane. This is 2 hurricanes now we've had to kind of cross our fingers for, because we can't do anything. We're so far away from Dan Bob. But he has a new hurricane. He said they renamed the hurricane. And if you're interested to see what they renamed it, check it out in chat. Also, guys, he also posted our link tree. You can find me on all platforms on there, especially our Facebook page. If you guys have not seen this Facebook page yet, take a look at my screen. This is one of those things where I've slowly watched this Facebook progress and grow, and the community is absolutely awesome because it's us in the Discord in this community. But this is what I have appreciation for, and I wanted to start with this because I think I can relate, and a lot of other people can relate to this. And this is something that Dan Bob posted. He said, "The good, the bad, the ugly, the week of September 23rd. The good, the overall market has been considerably better. I've seen many playable chart candlestick structures, not only many trend breaks, but also those more elusive base breakouts." He took RKLB on Wednesday morning, one of his best trades ever. Good process and followed his rules, and it took off. So let's just take a little peeky gander because I always like to cheer on what's going on. Look at this beautiful base breakout. It doesn't get much better than that, folks. On volume, I know him and Jolene, another member, took this trade, so I'm glad we could take a little peeky gander at the stock itself, but I'm glad you guys were there and you had the knowledge and the power equipped to be able to do that. All absolutely free, guys. Join. All you need is have an open mind and a golden heart, and you can see more stuff like this. It's absolutely awesome. So congratulations to you, Dan Bob. He says, "I have been struggling with my volume indicator on TradingView." So this is the bad. When I would switch from the daily chart to the 5-minute chart, it would not read the volume, which is the very reason I'm on the 5-minute chart to find current volume. I finally had enough missing trades and found a new volume indicator called up-down volume. I love it. It's so much better than what I had. He says, "The ugly Hurricane Helene, sadly, I'm right in her path and will be taking a direct hit. I will be offline for a few days. Prayers appreciated." So, of course, all love and prayers go out to you, Dan Bob Dan, the greatest moderator alive. I love to have this awesome team because even though he's going to be out, he made sure to put Jolene and B. Stewie at the helm. So just what an awesome community. I really just enjoy being a part of it. So you guys are awesome. And let's just make sure we're caught up on chat before we start into our first story. Yes, prayers for Dan Bob. David will jump in the truck and come get you. Yes, sir. Skirt, skirt. We're going to come throw him in the back, strap him in the back, go for a little ride. It'll be a good time. All right, guys. First up, you better believe we're going to be talking about the Chinese stocks. Now, the very first thing I'm going to bring up here is just, if you don't understand China, it's because nobody does, right? They are pretty ruthless, and if you got something bad to say, this kind of just sets the tone for China, in my opinion, before we go deeper into it. So China's top economics, and excuse me for not being able to pronunciate all these right, but Hang Ping criticized Chinese President Jinping in a private chat. At first, he was detained and removed from office, and then he disappeared, according to the Wall Street Journal. Now, this is not a surprise, guys. We've seen China make people disappear, like the Baba CEO, completely disappear off the face of the earth for months at a time, and then, they reappear, they're reincarnated down the road, with a different suit and tie. Sources report that the spring of 2024, Hang Ping made several impolitical remarks about China's weakening economy and indirectly criticized Jinping in closed chat on a Chinese mega app WeChat. As a result, a case opened against Hang Ping, leading to his detention and dismissal. And I just wanted to go over this because it's real, guys. Like I have appreciation for being in the greatest country where I can talk crap about any political party. I can say whatever I want about them, and I'm not either going to A, get beheaded, or B, just disappear off the face of the earth. They have complete control. So it's pretty scary. It's pretty scary to see, but that's the people that that we're facing out there. And so that goes into my first candidate to talk about, and that is when you are looking at bio stocks or China stocks, you need to have an understanding that there's already implemented risk. There's already implemented risk, right? Like it's already there. It's already there. They can literally come in and just completely decimate a company if they get too big or if they don't like it. So you need to be very, very careful of all of that. So this is going to bring up into my next kind of topic here, the aggressive stimulus measures. So when we talk about China stocks, the first thing that pops in my head is like BABA, okay? And we were talking about this curling structure back here, made new higher lows, and then we marked this out. We talked about how this has a great opportunity to break out from here, and it did. It did very wildly. Now it's extremely extended from the 10-day, but anybody that was able to get into that, it's a slower mover. This thing's moving much, much faster the past couple of days, so very, very nice. Also, PDD is another one. This thing had a huge drop on earnings, last earnings. Now it's doing that curl. This kind of reminds me, not the same sector, but if you remember, Meta, the last time they had earnings, it kind of looks something similar like this. See this big drop off here? And then it just kind of starts to curl back up. So I have that same kind of speculation that, you know, you get this big drop off and this curl up here. Well, that stimulus is going to really enhance spending in China. So there's going to be a lot more people investing in it. And if the banks are being, or if China is deciding to stimulate their economy, because they don't want us to win, or for whatever reason they're going to, because they need to stimulate the economy. You're going to see Americans getting excited about that too because of the growth in China, and some people are trying to get a piece of that pie in PDD or a BABA. Okay, so I just want to keep reading on. The stimulus blitz is sparking market speculation that Beijing is panicking over the state of its economy. Most analysts think China still needs to do more to boost its economy, particularly in spurring domestic demand. China pulled out an aggressive stimulus package on Tuesday at a rare press briefing about China's economy. People's Bank of China Governor Pan unveiled a swath of measures including slashing interest rates and reducing the amount of cash banks need to hold in their reserves. The measures were significant because Beijing has been holding back on a bazooka stimulus, even though China's economy has been struggling to stage a convincing recovery post-pandemic. So this just kind of goes into that's kind of been the thing, that China's not doing well, right? Their economy is not doing well. That's been what's in the news. Have I been over there? Have I seen it? Can I trust any of the papers that are on it? I don't know. I have no idea. But what I do like to see is the technical analysis. So why I called, why I say any of this, or why we want to talk about China, there's an unprecedented amount of volume coming in here, right? Off of a very big low, okay? This is something that's in play. Even if it comes back and it pulls back and it starts riding a moving average, that would be even better in my opinion. But right now, you cannot deny this volume. You cannot deny, I'm not saying it's a good stock to be in. We were even saying, this making new higher lows, holding a 30-day moving average is much better stock to be in, although it's much, much slower. But that is China stocks. Now, another thing that got brought up is how when we have received this stimulus from China and we get this push up, a lot of the shareholders are cashing out after the Chinese economic boost. Shareholders in some Chinese company have cashed out more than $1 billion from their holdings in the past week, taking advantage of improving market conditions brought on by an adrenaline shot in the country's economy. Internet investing firm has sold its entire stake in online travel agency Trip.com, $743 million block trade. And Chinese search engine Baidu later sold $534 million in the company's American depository shares. Let's see. This just goes on to basically saying all the amount of people cashing out after that big boost. It just goes to show some people aren't willing to hold on for the long haul. They're taking profits, guys. That's normal, right? So taking profits, that's good though. That's good. And we'll probably come right back around to China, the Chinese economy, and what's going on over there. But I do want to pivot here for just a quick second and that is Meta. Now, I've talked to you guys about Meta and Meta being a leader in the stock market, and I was only saying that by using technical analysis. So if we look at Meta and we look at the technical analysis, you can see it's been just trading sideways for a long time. And when the market had that huge pullback, Meta just keeps on pushing up, right? Anytime Meta would falter, or I'm sorry, the overall market would falter, shudder, or shake, or start to pull back, Meta continued to hold strong throughout all of that. And it was very nice to see. So I started calling Meta a leader. It definitely was a leader in the Mag 7. If you looked at that, the Mag 7, Meta really was holding everything up, holding everything together. So it's very nice to see that it's continuing to be a leader. And this piece of news talks about it hitting its all-time highs as Wall Street bests on AI vision. Meta stock traded at all-new intra-high Thursday following a developers event that put its artificial intelligence ambitions on display. Shares rose as high as $577 after market open before edging down 0.7%, around $564 mid-morning. At Meta Connect 2024 on Wednesday, CEO Mark Zuckerberg unveiled Meta's newest AI model, Llama 3.2. The tech giant also revealed its new Orion augmented reality glasses, as well as its latest Ray-Ban smart glasses and mixed reality Quest headset. Now, I don't know about you guys, but I liked the Quest. My kids still play it sometimes. It's just the video games never really took off. You know, they never really implemented a lot of new video games. It was like just a lot of endless, same repetitive kind of, you know, crap. And so like they need to have more new, innovative, more immersive games to keep not just kids' interest, but adults' interest too, primarily. And then of course, if they can get something that would be useful implemented into a work setting, so you can actually use this to, you know, I don't know, set up a workstation so it's clean and crisp and you don't have to have 3 screens in front of you. You have one screen and you can see everything very, very clearly, you know, wherever you look. And I've always been a big fan of Meta because when we read the William O'Neill's book, he talks about in the N, the M of Can Slim, that they talk about the management and how new management can usually feel these. Well, of course, Zuckerberg's been in this for a while, but it touches on and focuses on that if you're a good manager, you're going to buy up a lot of companies when you have the money on a pullback. So in that bear market of, I believe, 2021, or was it 2022? Let me just go back here. Right here, this one here. So 2022, I'm sorry, 2021, excuse me. I was right. Once we came down here, all the way down through this, Zuckerberg was buying businesses up. And I kept telling myself, you know, that this is what's said in the William O'Neill's How to Make Money in Stock, that great CEOs do, is that they have a lot of reservoirs in cash and they buy these companies up as the market's pulling back. And as it was, Zuckerberg did. He bought up a ton of companies, and it was really cool to see because it's just like, wow, you know, he's really investing in all of this, and he has. And so it looks like, you know, they have some new stuff that's coming out, but I still think, you know, when it comes to like the MetaQuest Quest headset, mixed reality headset, you know, I got to try it. You know, I got to try it before I buy it. Meta has raced to catch up with competitors in the AI space, fellow big tech firms like Microsoft and Google, as well as the startup and AI leader OpenAI. And while it's not as popular as ChatGPT, Meta claimed in April that its AI had an equivalent of 185 million weekly active users, closing behind ChatGPT's 200 million. So Meta has a lot going on for it, and of course, I'm going to continue to root for Meta. I like Zuckerberg because he does jiu-jitsu, so I'm a little bit biased in his fact. So if he's gonna, as a CEO of, you know, a Mag 7 company, if you're going to put yourself out there and train some jiu-jitsu and you know, really put yourself out there, I like you. I like you, Zuckerberg. I like what you're doing, and I like what you're doing with your damn company. It's a beautiful thing. So next up, we're gonna get. I'm not gonna go too deep into it, but we got some deaths on our hands here at Pfizer. Voluntarily withdraws sickle cell disease treatment, Oxbryta, from global markets due to painful disease complications. So I'm just going to skim over this because there's always going to be deaths when it comes to testing new drugs. And as sad as it is, you know, a lot of this is already kind of priced in. But the first thing I want to look up is PFE. So this is Pfizer, right? And so we need to understand, you know, when we're looking at Pfizer and something like this, when you think deaths, you think, oh my gosh, you know, this is going to be the worst thing for this company. It's really not. It's really not. You can see the death of this company was, you know, on this stage, what is this, 2 or 3, whatever one, where it starts to roll over. Excuse me. I got to bring up the chart every time. And I'm just going to do it. We got to do it because I'm not going to sit here. I know you guys are like racing to stage analysis. Oh, man. All right, let's bring it up. Where's the image? Here we go. Okay. So stage 4. Stage 4. All right. Right here it is. I don't know if you guys can see that. Maybe I can bring it up a little bit bigger for you. There it is. All right. Stage 2, stage 3, stage 4. So this is in that stage 4. That was the death of Pfizer. You know, so when it comes to news like this, it's not anything that's like too far-fetched or too crazy, but it is definitely something that, you know, we need to have an understanding that, you know, if they were going to make any money off this drug, it's no bueno. On Wednesday, Pfizer PFE said that the company is voluntarily withdrawing all lots of volatile or Oxbryta for the treatment of sickle cell disease, SCD, at this time in all markets where it is approved. Pfizer is also discontinuing all of its Voxlotor clinical trials and expands access programs worldwide. Pfizer's decision is based on the totality of clinical data indicating that the overall benefit of this drug no longer outweighs the risk in the approval sickle cell patient population. The data suggests that the imbalance in vascular-occlusive crisis and fatal event of require further assessment. A vasculocclusive crisis in a common painful complication of sickle cell anemia. I think what I need to do before I start reading this is to make sure that I can pronunciate each and every word before I make myself look like a complete fool. But at least you're getting some entertainment out of it, and I really hope that you are. And that brings me into my next conclusion. Would you do me a huge favor? I need you to do me a huge favor. Take a look at this. Click this live button. A lot of people don't know about it. You need to know about it. If you're going to watch this live, make sure you hit this live button. Bring this to the live, smash that like button, and then, of course, hit that subscribe button if you haven't already. It's damn near necessary that you do so. We want to make sure that you get reached out every time we have a show. B. Stewie says, I'd like to try Apple Vision. Yeah, I think that would be really, really cool. My biggest thing is from playing all the different, headset. I had a HTC Vive, a Meta, and this Apple. The only thing that I would want to look into is the graphics. After a while, it's just, you want them to be a little bit more crispy. You know, when you're watching a screen that's right up against your eyes, the screen in the game that you're looking at is far more blurry. So I don't know what they're going to do. I know that they're looking into like eye tracking, where it only registers the data that you're looking at and where you're looking at, if that makes sense. That's actually one of the companies that Zuckerberg bought up. So very, very interesting. But yeah, I think it would be cool to, like, you know, you're looking at stock charts and stuff, and you know, the MetaQuest or the Vision, you know what I mean? But yeah, for sure. And one last thing, guys, if you don't mind, take a look at my screen. We got the YouTube right here. If you guys want to learn our process, we do have a process. A lot of it follows William O'Neill's teachings, Christian Quilamagi, Oliver Kell, and you name it. There's plenty of other people that we've been influenced by, but we have created an awesome process, and we want to help you find yours too. Click on this YouTube. You can find in this YouTube the free trading school. Go through that trading school. Watch each and every bit of it. There's lots of nuggets in there. And put in the comment section what helped you most. Of course, here's our Discord and TradingView. If you want to use TradingView, one of the best platforms, use my link. You'll get $10 off, I think, or maybe it's 15 right now. And then here's our Facebook. So click that Facebook. You'll be good to go. And then you'll be good to go. You don't need to worry about anything else. All right, now let's go on. You have the MetaQuest area. MetaQuest is the shiznit. And just back to healthcare, guys. I don't want to leave. Next up is going to be about Micron, but I just want to quickly go over healthcare. Anytime we look at anything like this, we always want to look at you know, the sector ETF. So here's XLV. Here's the healthcare sector ETF. So we can see how it's doing. And you can see the last time we were down in this area here, we bounced off this 50-day moving average for healthcare, right? We've bounced. Is it going to bounce again? I have no idea. But we've been on a very nice uptrend ever since we broke out of this base. So will we continue on this uptrend by bouncing off this 50-day moving average like we have? I don't know. But this article seems to think that we are. Healthcare stocks poised to shine, highest revision since June single opportunity. The stock market is reaching new highs as the S&P 500 exceeds 5,700 points. While the tech stocks shine, healthcare is emerging as a key sector this earnings season. Promising revenue growth position healthcare stocks as unique opportunities for investors. I thought this picture was pretty interesting. So far this year, we've had 40 all-time new highs, okay? And this is a chart that's actually showing, maybe I can zoom in here for you guys. Excuse me. This chart is showing each year that has had these new all-time highs. And you can see, you know, this is the average is 19.3%. So 19.3% is the average new all-time highs that we would get. We're up to 40 new all-time highs so far this year. So like I said, guys, it pays to be positive. It always pays to be positive. And in this situation, it pays to be positive once again. Just back to the healthcare though, they're saying, you know, we need to focus on it. If you think that healthcare stocks are going to do well, use XLV as a guide. If we bounce off this 50-day moving average and create a new higher low after we confirm this continuation on this uptrend, then find the healthcare stock that you want to take and take it. Run with it. You know, that's totally fine. That's not going to hurt my feelings at all. But just make sure you're in a leader. Make sure you're using risk management. And make sure you have a structured process. You're not just getting in whenever and getting out whenever, because you can't replicate that BS. If you do random shit, you'll get random results. Next up is Micron. Now, we've had a lot going on right now in the sectors. Like if we look at the head, NVDA, the big boss stuff, if you guys don't see what I'm seeing in front of me right now, then you don't trade like we do. This is a huge flag, pennant formation setting up right now, and it's looking absolutely scrumptious. Maybe not today, maybe not tomorrow, but maybe in about 3 weeks. Because what I'm seeing here is maybe something like this, and you know, picture perfect like this, and then getting really, really tight in this area. That's what I'm waiting to see for NVIDIA. In the meantime, stocks like SMCI take an absolute hit on being charged or under like a lawsuit for basically the way they were managing their books. Okay, so that's some pretty messed up stuff right there. So you can see, and you have been able to see that this has not been a leader in the market. That's why we stayed out of it. It's below all of its moving averages, right? Where NVIDIA is the leader, okay? So I just want to focus on that. And then, of course, we'll go to MU, and let's see how MU is holding up. So MU had a nice pop here today, obviously due to their earnings. They beat on their earnings. But one thing I do want to point out is MU is not the leader. Could it emerge as a good competitor or qualifier for NVIDIA? Maybe. But as of right now, look at all this overhead resistance, right? There's no clean setup here. But we did get this huge pop on volume, and if it pulls back and forms a nice trend or a base setup, then I might be interested. But for now, we're just watching MU pop up, and we're seeing why. Micron stocks sure as, excuse me, guys, Q1 revenue forecast top analysis estimates. Micron MU surges 17% before the bell on Thursday after chipmaker forecasted higher than expected revenue for the upcoming quarter. Micron projected first quarter revenues at $8.5 billion to $8.9 billion, above the $8.3 billion analysts anticipated. The company's executed attribute has raised guidance to a more favorable pricing environment, as well as a robust demand for Micron's memory chips used in data centers to power artificial intelligence. With the advent of AI, we are in the most exciting period that I have seen for memory and storage in my career, CEO Sanjay said during a call with investors Wednesday afternoon. He said the company is entering fiscal year 2025 with the best competitive positioning in Micron's history. Executives now expect the market for high bandwidth memory HBM chips used in AI data centers to increase to $25 billion in 2025, up from $5 billion this year, and heightened demand for its HBM chips to bring in multiple billions for next year. So we'll have to keep that high bandwidth memory, HBM chips. That's going to be on the payroll. It's going to be on there. We're going to have to keep a close eye on seeing that pop up from time to time. What do we got? What do we got in the chat? Let's see. Dan Bob, Toro. Oh no, disability. Ouch. Yeah, tore both shoulders. I have had some shoulder issues, but I cannot. I'm not even going to bring them up when you start saying that stuff. Saeed, what's up, Saeed? What's going on, man? It's good to see you. Jolene, sweet Jolene's here. It's good to see you, Jolene. Good to see you. Good to see you. I should probably start putting the chat like over here or something, so that way it doesn't look like I'm breaking my neck when I'm talking to you guys. But yeah, let's finish with, let's see, risk management video is my favorite, but I like watching all of them in the trading school. Appreciate that. I really appreciate that, Jolene. Yeah, you know what's great is like after a while, after you've been doing this for a while, you don't think about risk management as much. I mean, you do when you go to take the trade and stuff like that, but it's kind of just like built into you. But if you don't really study risk management, guys, if you don't really study risk management, you have to understand that you're really setting yourself up for failure, because if you don't know how much you're risking, you might not have enough to risk anything tomorrow. And you can't be a trader if you don't have any capital. So you got to protect your capital first. What's up, Norman Conklin? It's good to see you, brother. I knew you would slide in. Norman Conklin just kicked in the back door. He's like, what's going on? Give me a brew. Let's get down. All right, guys. So we have the Fed set for, this is what interests me the most, guys. Is the Fed set up for another jumbo cut? 2-year yield future points at 50 basis points after election. So they're talking about another jumbo cut. Now, before I even read this, I'm just going to tell you guys, because they're going to talk about a whole lot of things on here. And, you know, I could just talk your ear off and say all this BS that's coming out of this, show you a bunch of different charts. We could do that, right? But I'm telling you guys, if we just click the X here, I want to show you, this tool stays up to date. You don't need news. You don't need nothing. You need the CME Fed tool or me, because I'm looking at this almost every day, okay? After every big news catalyst, I'm looking at this, okay? So right now, we are currently, our federal interest rate is between 4.75% and 5%. So when we look at this thing and we see this, they're at a 51% chance that they're going to cut another 50 basis points. That's pretty crazy to me. To me, this is very unexpected. This is very, very unexpected. And it might show a little bit more fear in having overdone it. And now they're really fearful for the job labor market. So this might be alarm sounds. But at the same time, if they're going to cut rate and it's going to be cheaper for us to borrow money, I think more people are going to be spending. Now, will that whipsaw action, that whip where you know the Fed interest rates, they lower and it starts here, by the time it trickles down to us is probably going to be about 6 months. So what's going to happen from here to then? That's the real question. So instead of diving in out of the analytics, we just look at this probability rate and we're seeing 51.1% chance of coming down another 50 basis points in November. That's as soon as November 7th. 2024, guys. So pay attention to that, because if they are going to be cutting that soon, that fast, that would be something else, you know. And they don't even have on here that they might stay. They're saying 50% chance a quarter, 50% chance a 50 basis point cut. So I thought that was very interesting, and I'm glad I got that off my chest, guys. I'm glad I got that off my chest. And something else that we're going to do just before I continue on reading, of course, in the chat, guys, I have asked you what type of trader you are. 23% say that you're day traders, 46% say that you're swing traders, 8 are investors, and 23% of you said that you're a hybrid of them all. You do a little bit of all of it. I love that. I love that you guys are voting. So make sure you vote on the poll. Of course, hit that like and that subscribe button. It always helps me out tremendously. Thank you very much. So Erica says, when you say pricing rate cuts into the market, what does that mean? So the market is always forward looking. So the price of what is going on right here today is speculation on future happenings, right? So when I say pricing rate cuts in the market, that means people are already looking, forward looking, that this might happen. The market, the Fed might cut interest rates. So therefore, because I think in the future they're going to cut interest rates, I'm going to buy heavily now. So I'm going to forward look that this is going to happen in the foreseeable future. So people automatically are already pricing things in. So because the market is forward looking, you know, it's always looking what is going to happen, not what has happened. Well, I mean, that's to be argued, okay? But it's always foreseeing, it's trying to predict the future, right? That's why when something like, you know, earnings comes out and this company earns way more than they should have. They earned way more than they should have. That takes the forward looking, and if everybody got it wrong, and now everybody's scrambling to buy, so that way they can be where their new forward-looking analytics look like, okay? So that pricing and rate cuts into the market, when I say that, it specifically means people buying in with anticipation that something else is going to happen. And I hope that explained that well, Erica. I may have just confused you more, and if I did, I promise to reiterate that very, very soon. But yeah, that was a very good question. Very, very good question. Let's see, what else do we got here? We got market braces for rising unemployment. I found this pretty interesting because we just talked about this, you know, with the rate cuts and them talking about doing a 50% chance of doing another 50 basis rate cut. Clearly, they're worried about the labor market. And it says immigration's impact on unemployment and labor costs took center stage as experts examined the potential consequences for the U.S. economy with concerns about rising joblessness. The panel also discussed how investors might turn to assets like Bitcoin and gold during periods of instability. Roundtable anchor Rob Nelson led the conversation, joined by John, co-founder of Market Rebellion, and David, CEO of The Media. I don't think I'm going to pronounce that right, but we'll go for it. Gohenstein. Together, they explored the economic challenges ahead and potential responses. John highlighted the effects of the open border policy statement, the influx of immigrants in pushing unemployment up, and it will continue to push unemployment up. He emphasized this situation could lead to decrease in labor wages, saying we will be bringing down the cost of labor pretty dramatically. Najarian warned that without addressing the issue, the U.S. labor market would face challenges in the coming years. Now, no matter what your stance is on the immigration or what's going on with all that good, fun stuff, the biggest thing that we want to focus on is what is happening with our labor. If we continue to have more job demand than we do labor, like we were for a very short period of time right after the 2020 pandemic, we were having a huge shortage. Nobody wanted to work. Nobody wanted to go back to work, right? And now we are having no demand for jobs, right? We have unemployed, but we don't have jobs to fill those. And if they're talking about illegal immigrants, that can't really fit into the unemployment rate because they're not even on the ballot, like they're not even registered, right? So you can't take that into account that they're unemployed if they're not on any sheet saying that this percentage of people are unemployed. So when I see that, I'm just keeping an eye on technical analysis, right? Of course, we have a bumpy road ahead. Hopefully it's smooth. Hopefully it rides the 10 or 21-day moving average. But every time that data comes out, we're going to get an influx in that volatility. And we'll see it. And we'll see it go down. And we'll be there for it, baby. We'll be there. More TJ, Jolie says more TJ Maxx. All right, guys. We got one more story. So I just wanted to bring this up because if you guys look at the overall market, you can see, I mean, we're just on this beautiful uptrend. This is when we were risk off, when we broke the 21-day moving average. This is where we got risk on when we broke above the 21-day moving average, missing all of this. Same thing happened over here. We missed the whole Japanese trade, so we stayed safe in the market. Now the market's been heading higher. We are talking about, yes, we are extended from the 10-day moving average, but we are risk on. So if you weren't able to get a piece on here and you're looking for something to get in, the best time to do it would be on a nice pullback and then a trend break in your stock that is relatively strong compared to this market. I'm only holding 3 stocks. I'm holding CAVA. I took off nearly the 10-day moving average yesterday. I see a rounded bottom, so I decided to try and grab there. Of course, I'm just using that low of day. I'm anticipating a trend breakout, but I found I got better risk using that 10-day moving average on this trade. So that was just my take. Of course, I'm still holding MODD. You guys were in the chat when I took this trade. Don't really care for it right now. Still like the look of it. Still happy to be in it. But I don't, when I get into a trade, I expect it to move that day. I expect it to start its push that day. If not, I'm just kind of in a lagging stock, and I don't like parking my money in anything like that. And then, of course, I took CAVA, same rounded bottom that I was seeing in PLTR. I'm sorry, no. CAVA. Yeah, CAVA. Same thing with PLTR, though. Getting a rounded bottom here, bounce off the 10-day moving average, so I just decided to take it using that low. I love this volume, too, coming in right here. Like a huge amount of volume. It's almost an anomaly, though, because it's so much volume, but yet it didn't move very far, so we'll see what happens on this. I mean, it's got this nice push up. It's riding a 10-day moving average. If this thing can just continue to curl and head higher, we'll take profits on the way up. All right. So let's just check the chat and make sure we're all B Stewie says what you're doing on YouTube. Smash that. Yes. Stop what you're doing on YouTube and smash that like button. Wow. I almost completely missed the emoji, B Stewie. B Stewie says, stop what you're doing because I'm about to ruin. Yeah, YouTube, smash that like button. Smash that subscribe button. Smash it. Give it the people's elbow. Do what you need to do. Yes, that is my promo. Smash people, give it the people's elbow. All right. So in conclusion, ladies and gentlemen, China stocks are in play, but they come with much more inherent risk than your normal Mag 7 stocks. Do keep in mind, we have been risk on for quite some time, but we are extended from a 10-day moving average. Keep in mind that PDD is one of those China stocks that are in play. BABA is also a China stock that is in play, but I am watching some very fast rip your face off movers like TIL currently, which is a bio stock that if you hold overnight, it might take an absolute colonoscopy on you. So, get the bed sheet because this is going to be disgusting, okay? Be careful is what I'm saying. Use risk management and know that this thing can drop overnight, okay? That is TIL. We have a couple more we could go over, but I don't think we need to do that on this show. So I hope you guys have an absolute awesome day. Hope you guys have an awesome night, and we will see you on, I think, is it Monday or Tuesday? Shoot, I don't know. But I'll tell you this. I love you. Thank you so much for being here. You guys are awesome. And congratulations to those of you. I'm reading your thoughts and everything that's going on in the chat. You guys are killing it lately, and I'm very proud. Take care, guys. We'll see you on the way out. All right. Jolene, yeah, we'll see you guys Sunday. Somebody's got to let me know what I'm doing when I'm doing it, because I sure as hell can't keep everything straight. Yeah, Jolene, Sunday, thank you very much. I appreciate that. Jimmy Bright, it's good to see you. Thank you so much for joining. Norman Conklin, you are always here. Thank you for waking up, shaking the cobwebs off the cot and walking to the front of the room. He's sleeping in the back. Good luck, Dan. Absolutely, Predator. Good luck, Dan. Thanks, Dave. Good night, squad. See you, B. Stewie. Thank you so much for being here. Erica K, good to see you. I'm pumped that you were with us tonight. I hope you got a little something out of the Facebook message. I messaged you back on Facebook in our Swing Trader Strategy Facebook page. Let's see. Saeed. Thank you so much for joining, brother. I appreciate you. And I think that covers it. I think that's everybody. We're going to end the poll there. What type of trader are you was the question. The answer to those questions, if they pop up, because it's not popping up for me, but we have 42% of you saying that you're a swing trader. 42% of you. So that's what I am. That's what I like to consider myself. I lose money when I day trade, to be quite honest. I am working on strategies to help that. But for right now, if I take a day trade, it is on very small risk. Hybrid of them all, 28% of you, 21% say day trader, excuse me, and 7% say investor. 14 of you voted on the poll. Thank you so much for doing that. Kevo Plablan says, let's go. B. Stewie says, prayers to Dan Bob. Yes, sir. Hearts and prayers. Nothing but the best goes out to my Dan Bob Dan, the greatest moderator alive. Be safe out there in Hurricane Diddy. Be very careful out there, homie. All right, guys. Thank you so much. Have a great night, and we will see you on Sunday.